Tim, I know you've been closely watching these numbers, closely watching the call. It looks like TSMC believes its size and scale will help it beat some of these downbeat trends in the sector. Will it? Will they be able to beat those trends?
Well, they're betting on it. They spent $36 billion last year on CapEx, which is a huge number. Right now, as we speak, TSMC's IR call is going on. In a few minutes, we'll find out what they expect to do in 2023. Fourth quarter, which just ended, wasn't that great, relatively speaking. They actually missed their estimates at the top end. But at the bottom line, their margins are amazing. They're doing very, very well. Their clients very, very much need them, despite all the macroeconomic problems we're seeing going on in the world. So, back to your question, they do feel confident that this year will be good for them, but there will be a bit of a dip over the next few quarters. And so we're looking out to see from them how bad that dip would be and how long it might last.
Tim, you mentioned that TSMC is spending up to have that advanced technology that they think they have an edge. I'm wondering if the trend, though, is different for the rest of the industry. I think of Samsung's earnings where profit dropped by a quite sizable amount, and there was a lot of talk among analysts. Do they need to cut back on CapEx? Do they need to lower output? Does that seem to be the trend for the rest of the chip makers?
Well, the thing with Samsung is that they are really the closest rival to TSMC, but so much of Samsung's chips are commodity chips in the memory space. And when things are really good, they're fantastic in that space. But when things are weak, it really falls apart very quickly. That's what Samsung's seeing. TSMC goes in the opposite direction and says, we're going to spend a gazillion dollars building out our technology, doing all this great stuff, and we're going to bet that we're going to be the only people who can do this, and you are going to need it come rain, hail, or shine. As evidence of that, despite the fact that 4Q was quite weak, shipments actually fell from the previous quarter. Their ASP, their average price per wafer, actually increased 5 or 6%. So they have pricing power, which tells you that they have a technology and an offering that the clients will need even in weak economic times. And that's really their bet going into the future.